Dow Industrials are on pace for their worst April since 1932. Let's get more from John Zechner, chairman and founder of Zechner Associates. John, thank you very much indeed for joining us. Start off with Powell. Is the market that worried that he might be abruptly replaced by President Trump?
Well, I don't think the reality of that happening is actually too high, Andy. And I don't know if it's as well maybe to deflect the all the criticism and the attention being on the bad tariff policy right now. You need something new, sort of deflect a little bit of move. So I'm not sure. But anyway, no, he can't fire. And I think there is more uproar. And you're already seeing it in the credit markets. You're seeing it obviously in the currency markets in a big way and the stock market. And I think what a lot of pundit, a lot of commentators are missing the point as well is that Jerome Powell doesn't set policy by himself. There's 12 voting members of the board and have to vote majority to make a change in interest rates. So yeah, what is he going to do is, change all the ones who are not voting on his behalf. So it's just, it's more Trump uncertainty inserted into this market. And investors, stock investors, they really hate two things. The first is uncertainty, and the second is downgrades of expectations. Mm-hmm. And we've gotten a load of both recently, and this is just another degree of uncertainty. I mean, the tariff thing is just a nightmare show when you look at they're on, they're off, they're specific, they're delayed. How do companies sort of plan long-term capital spending or even shorter-term moves in that environment? I mean, they're totally upending the system in here, and then you throw the Jerome Powell thing into the mix. Quite honestly, I'm a little surprised the market isn't off even more. Maybe it's just taking time, but clearly foreign investors have soured on the U.S., and you see that nowhere more apparent than the move in the U.S. dollar against all the other major currencies, and certainly why, by default, gold is just, the de facto winner in all of this.
You have a chart showing U.S. net wealth. Now, explain why this is a metric you're watching. I suppose stocks are a big part of that.
Well, yeah, it's interesting. This is courtesy of David Rosenberg Research, where we get that regularly, and you sort of talk about why is Trump doing the whole tariff thing? Because all these other economies are ripping the U.S. off. So this is basically just a chart of U.S. net wealth over the past basically 4.5 decades, and really globalization started in the 80s. It was in the Reagan era. It's when companies moved on a global basis. It was the big consumer products companies, the pharmaceutical companies. And into the 90s, you got that with the technology companies. And look at the move in U.S. net wealth over that period. It's gone from about 16 trillion to 160. Okay, so who exactly is getting ripped off in this process? So it's just more of these arguments don't make sense. And the whole idea of the tariffs and why they're doing that, globalization benefits everybody. I mean, we learned that in economics 101. It's very simple. Everybody focuses on the activity where they have the greatest productivity advantage, and then the whole pie, everybody as a whole does better. And, great. U.S. is, exceptional in terms of innovation, marketing, branding. There's a lot of things they do well. You know what they're not great at? Manufacturing. They can't compete on a global basis against Vietnam, China, and others because the labor costs are too high. So, unless everybody wants to start buying $4,000 iPhones or something like this, this will be a failed policy. And in the end, the only way you could make manufacturing work in the U.S. better is if you go to fully automation. And how is that going to help his base and these jobs? Are they going to return to, it's like a bad Bruce Springsteen song or something like that. It just seems so misguided. And, now they've got the focus on the Fed chairman. For what reason? Because he won't lower interest rates. Yeah, he's going to lower interest rates when you got inflation at risk of taking off again. It's just, it's pretty self-serving, and markets do not like that, and they're voting with their feet.
Maybe we could have a look at the U.S. dollar. Do you think there is something of a flight to sell America phenomenon happening now, John?
Absolutely, and you gotta remember that as the U.S. has been running these trade deficits over decades, you offset a trade deficit, or effectively a current account deficit, by having a capital account surplus. You got the dollars have to balance in the end. The dollars going in versus going out. So I mean, if the U.S. is going to be the consumer of the world and spend more than everybody else and run these big trade deficits, they have to have a capital sort of surplus on the other side to offset it, and that has been investors into the U.S. buying U.S. treasuries, buying U.S. real estate, U.S. stocks in particular. If this and they've been double winners on that one because the currency's been going higher as well. If that all starts to reverse and they pull the plug in a much larger way, and we're already seeing it, yeah, that's a problem for the U.S. They face what Canada, the oil sector, has faced, as you know, Andy, for probably the past 2 decades. It's just net money leaves, and in the end, that depresses valuations. And, that's why the premium valuation in the U.S. stock market has been disappearing.
John is very kindly sticking with us for a second block. John, thank you very much. After this, he'll share the names of what stocks he would buy if he had to choose only 3.